What if I told you that with every venti, every frappuccino, every espresso shot, Starbucks is not just serving coffee, but it's also functioning as a bank? Yep, you heard that right. Today, we're stepping off the beaten path and delving into a unique perspective that's right under your nose. Let's explore how Starbucks, the global coffee giant, is quietly yet effectively operating an unofficial banking system. The story begins in 1971 in Seattle's historic Pike Place Market. Three partners, inspired by their love for coffee and tea, opened the first Starbucks store. They didn't know it then, but they were brewing the beginning of a global phenomenon. Fast forward to today, and Starbucks is a name that needs no introduction. With over 32,000 locations worldwide, it has embedded itself into the daily rituals of millions of people, far from its humble beginnings in the Emerald City. But there's more to Starbucks than its iconic green logo and irresistible aroma of coffee. A key ingredient in Starbucks' success recipe is the Starbucks Rewards program. Launched in 2009, it's not just a loyalty program, it's an entire ecosystem. Boasting over 20 million active members in the US alone, it offers more than just free drinks and treats. By loading money onto a Starbucks card or directly into the app, customers become part of an innovative banking system. It's a system that's as much a part of Starbucks as the coffee beans themselves. And here's the kicker. On any given day, these Starbucks accounts hold more money than many actual banks. It's an incredible testament to Starbucks' innovation and our trust in a brand built on, well, coffee. Now you might be wondering, how does Starbucks hold all this money? Let's find out. Just like your trusty bank card, a Starbucks card or the mobile app lets you carry money, digital money that is. But instead of withdrawing cash, you're using this digital wallet to buy your favorite drinks and food from Starbucks. This concept is called a stored value system. You load a certain amount of money onto your Starbucks card or into your mobile app, and it stays there as a digital balance, ready to be used for your next Starbucks run. It's like your personal coffee bank account, which you can top up whenever you want. In many ways, this functions very similarly to a traditional bank account. You deposit money, it stays there safely, and you withdraw it, or in this case, spend it when needed. However, there's a key difference. The money on your Starbucks card doesn't earn interest, unlike a regular bank account. And while banks lend your money out to earn that interest, Starbucks uses your money directly to fund their business. The sheer scale of this operation is mind-boggling. As of 2020, it's reported that Starbucks had over $1.6 billion loaded onto Starbucks cards and the mobile app. To give you some perspective, that's more than the deposits held by many small banks. It's clear that Starbucks has managed to turn our love for coffee into a financial ecosystem that functions very much like a bank. But what's in it for them? Why would Starbucks be interested in holding onto our money? Let's find out. In the world of finance, Starbucks has brewed up quite an ingenious strategy with its stored value system. For starters, the money you load onto your Starbucks card or mobile app is like an interest-free loan to the company. They get to use your money, and unlike a bank, they don't have to pay you any interest on it. This concept, called float, is often used by insurance companies. It's the money they hold temporarily before paying out claims. In Starbucks' case, they hold onto the money until you decide to spend it on your next cup of coffee or treat. And it's not just a few isolated transactions. A staggering 40% of all Starbucks transactions in the US are done using Starbucks cards or the mobile app. That's a lot of money flowing through this system. But the benefits don't stop there. There are potential tax benefits as well. When you load money onto a Starbucks card, it's considered a liability on their books, not revenue. They only recognize it as revenue when you actually purchase something. This can lower their immediate taxable income and hence their tax bill. It's yet another clever twist to this whole system. But what does this all mean for us, the customers, and the economy as a whole? Let's explore that next. So we've learned how Starbucks has created a unique financial ecosystem that's all its own. But what's the real impact here? Well, for Starbucks, the benefits are clear. This stored value system provides a significant boost to Starbucks' financial health. It creates a steady cash flow that Starbucks can use to fund its operations. It's almost like having a massive interest-free loan that customers willingly provide. And remember the Starbucks Rewards program? It's not just about earning free drinks. This program plays a critical role in retaining customers and encouraging spending. The more you spend, the more rewards you earn. It's a cycle that keeps customers coming back, building a loyal customer base that's willing to keep their money with Starbucks. But what about the broader economy and the global banking system? It's an interesting question. While Starbucks isn't replacing banks anytime soon, it does introduce a new model of consumer behavior and financial engagement. Companies acting as pseudo-banks could become more commonplace, and this might prompt traditional banks to innovate their offerings to compete. For the economy, it's a mixed bag. On one hand, it drives consumer spending, contributing to economic activity. On the other hand, it also diverts money away from traditional financial institutions where it could be used for lending and other services. But how does this all stack up against traditional banking? And why are we so willing to trust Starbucks with our money? With Starbucks, there's instant gratification. You load your money, earn rewards, and get to enjoy your favorite beverages. It's a seamless experience that's built around convenience and perks, turning every purchase into a reward-filled experience. With traditional banking, the benefits are different. Your money earns interest over time, and it can be used for a broader range of services like loans, insurance, and investments. So why are we so willing to give Starbucks our money? Why do we trust a coffee company as much as, or in some cases, even more than traditional banks? A part of it is trust. Starbucks has consistently delivered quality products and service, and this trust extends to their financial dealings. It's also about convenience and rewards. With just a few taps on your phone, you can pay for your coffee, earn rewards, and even tip your barista. It's an interesting shift in consumer behavior, and it makes us wonder what this means for the future. What if more companies started doing this? What if in the future our wallets are filled with company cards instead of bank cards? Let's explore that. The success of Starbucks' financial model has certainly not gone unnoticed. Other retail businesses, large and small, are looking to Starbucks and asking, can we do that too? And the answer might very well be yes. Think about it. Companies you frequent, from your favorite clothing brand to your go-to fast food joint, could all have their own stored value system. Imagine your wallet filled with cards from all these companies, each offering rewards and benefits tied to their products or services. If more businesses started operating this way, it could change the financial landscape. We could see a shift from traditional banking to a more fragmented system where each company essentially becomes its own mini-bank. This future might not be as far off as you think. We're already seeing a move towards a more digital, decentralized financial system. Cryptocurrencies, peer-to-peer lending, mobile wallets, these are all signs of this shift. Of course, with change comes challenges. Regulation, security, and trust will be big hurdles to overcome. But if Starbucks' success is any indication, it's a future that's more than possible. With that said, thanks for watching, and until next time.